Ladies and gentlemen, good day and welcome to United Breweries Limited Q4FY23 earnings conference call hosted by Investec Capital Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance in the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harit Kapoor from Investec Capital. Thank you, and over to you, Mr. Kapoor.
Yeah, thank you, Anju. On behalf of Investec Capital Services, would like to welcome all the participants to the call, as well as would like to thank the United Breweries management for giving us this opportunity to host the Q4FY23 earnings call for United Breweries. From the management at United Breweries, we have Mr. Radovan Sikorsky, Director and CFO, as well as Mr. Robin Axton, who's part of the Business Control and Investor Relations. I'll now hand over the call to Radovan for his opening comments, post which we'll take Q&A. So over to you, Rado.
Thank you. So good afternoon, everyone on the call, and thank you for joining. So today we will discuss Q4 and full year 23 results of UBL, and I'm here together with Robin, and after the opening comments on our results, we are of course happy to take your questions. I will start with the highlights of Q4. Volume growth of around 3% in the quarter, driven by Telangana, West Bengal, Uttar Pradesh, Rajasthan. We faced some route to market headwinds during Q4 as well, and the volume growth, excluding some of that, was around 17% for the quarter. The premium segment, again, recorded growth ahead of the total portfolio, which is nice to see, growing around 19% in the quarter, driven by Heineken, Kingfisher Ultra, and Ultra Max, which was all nice to see. Net sales were up, in a region of 3.5%, with healthy pricing of around 5%, with some of the positive premiumization coming through in net sales as well. But quite a bit of set off there again by the negative state mix. Now, price increases have been taken across multiple states, and we have a continued commitment in driving revenue management activities. We are putting much more effort behind that, and we see some fruit coming out of that going forward as well. Gross margin under pressure, as I had said before, for Q4 that it would come, and that's really coming through the cost of sales, the barley, and the packaging material. The decline versus Q3, so we spoke that pressure would continue, was slightly more, but that was primarily also because of the state mix effect. So the state mix effect was slightly higher than we thought, and therefore, slight decline in the GP margin. On the EBIT margin, mainly driven by that gross margin, and that was the key drive on that one. In terms of highlights for the full year, so a fantastic 31% growth. So again, showing that category really coming back, and actually 2023 March year end was the highest volumes we have sold, in terms of if you look back historically, which is great to see. The premium segment grew close to 60%, strong net sales growth as well, supported by the pricing, but of course impacted by the negative state mix. The margin declined for the full year. Again, I don't need to repeat the inflationary pressure, but we also, of course, got some fixed cost leverage in that, so that mitigated some of that negative impact. In terms of, from the board meeting, the board proposed a dividend of 7.5 rupees per share, and although that amount is slightly lower than last year, also last year we had quite high cash positions, but still, it's quite a bit higher than in previous years. And that really shows our commitment to shareholders that we really believe in the long-term category of this business and the resilience of our business going forward. So I think that is nice to see. In terms of the final, the outlook, nothing really changes from that perspective. We believe in further building category growth, driving premium through our portfolio, Heineken, Silver, the Kingfisher Ultra family. So we will continue on that journey. In terms of the inflationary pressure on our cost base, well, that will continue in the near term, like I've mentioned. But we see some light at the end of the tunnel as we get to the back end of the year as well. And, we will continue with our revenue management initiatives and, of course, have really a cost mindset in terms of managing our cost base. So, overall remain optimistic on the long-term growth potential of this industry, increasing disposable income, favorable demographics, and premiumization. So with that, I would conclude, and I think yes, we can move to Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Please limit your questions to two per participants. Should you have more questions, we request you to get back in the question queue. The first question comes from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question was on the demand front. As we exited the quarter, 70% volume growth ex Tamil Nadu. It seems growth rates were fairly healthy, but as you exited the quarter, did you sense any adverse impact from, unseasonal rainfall, as a lot of other consumer companies are calling this out? And do you see that as a risk for the summer quarter, which is the current quarter?
So you're saying moving into quarter one of this year, yes?
Yes.
Yes, so the weather has been having an impact, particularly in the north, definitely, and we see that. So it's putting some pressure on what we're seeing in some of the volumes. That consensus is there for sure. Sure.
And the second part was, other than the weather impact, and if you look, is the underlying consumer spending behavior fairly healthy in your view? And how has market share progressed for United Breweries, including or excluding the Tamil Nadu piece?
So in terms of consumers, we're not seeing any impact. It's really too soon to tell. We're still confident behind that, and we're seeing the strong premiumization as well. So we're seeing, that disposable incomes must be playing a role there as well. So at that moment, I feel, that I don't see really any issue in that respect. In terms of your question on market share, we have come under a bit of pressure in our market share, excluding Tamil Nadu. But so we have lost, low single-digit share. But again, you probably know even better than me, how volatile these market shares can be across the different states, also depending on supply from interstate supply, etc. So, I wouldn't put too much reading into that at this point. I think we needed to look at it from a more longer-term perspective.
Sure. And the last question I had was on, raw material inflation. You said this might remain a headwind in the near term. If I recollect correctly, last time you spoke about the high-cost barley inventory probably getting exhausted by Q1 of FY24. Is that the same situation status quo right now? and we are increasingly finding that the fresh barley crop in India, the prices seem to be moderating. I guess you would be procuring the fresh barley. Any color on incremental input cost inflation, particularly for barley and for glass? So assuming the state mix remains constant as Q4, would it be right to say that Q4 was bottoming out of gross margin?
Yes. So in terms, like you rightly said, I mentioned it in the last call that quarter one is going to continue being difficult for us, right, in terms of margins. Hopefully the weather picks up a little bit, and I think there are some green shoots in that in terms of the volume side, but the margins, pressure on margins in Q1 will continue, and we should start seeing some benefits flowing through in quarter two as we start, incorporating the new barley crops into production. The current status on the barley in the market, it's a good crop. Quality is good. Some issues with moisture, as it's been raining quite a bit, as you rightly said about the weather conditions. So it has been raining more in those northern parts, in the Rajasthan area. So there is moisture in the barley, but it seems to be that the crops are still good. And in terms of pricing, it's sort of more or less in line to what we thought, that there is, pricing is coming down versus what we had in the past. So that's good to see.
Sure. Thank you so much, and wish you the best.
Thank you.
Thank you. Next question comes from the line of Nilay Shah from Moon Capital. Please go ahead. The line of Mr. Nilay has been disconnected. I'll promote another one. That is Krishnan. That is Jay Doshi from Kotak. Please go ahead.
Hi, thanks for the opportunity. My apologies, I joined a bit late, so if the question has been answered, I'll go back to the queue. Could you give some color on your market share trends in the past couple of quarters? Have you managed to maintain market share, or are you losing market share, both in the premium segment as well as mainstream segment? That's my first question.
So like I said in the previous call, we have come under a bit of pressure in the market share in total, very low single digits. But again, like I mentioned to the previous question, I wouldn't read too much into it. There is volatility in market share across states when we try and consolidate across the whole of India. So, that's the way we look at it. In terms of premium market share, I believe we are broadly flat in terms of the growth. Maybe, excluding route to market share, it could be around, I would say it's broadly flat. As you know, it's not that easy to gain exact market shares, but the way we see how we are growing in the market, I would say we're broadly flat.
Understood. That's helpful. And if you have not already answered, could you give us some color on what's the impact of AP Telangana loss of volumes on a YOY basis, and what's your strategy for those markets? And if you answered, I'll look at the transcript later.
Yes, I've mentioned in the transcript, I said that, excluding some of the route to market headwinds, we had a growth of around 17% in the quarter. So, on Tamil Nadu, we're seeing some positives coming through for summer in terms of volumes, as there is shortage of capacity as well. So we are cautious in terms of saying if that will continue, but it looks like, for the next couple of months, we see, increased demand for volumes, which is nice to see. Whether that will be permanent, I cannot say at this time as we work through improving the situation there. We continue with the same route to market model that we said, with the changes we made, using our own sales force, and we stick to that. But there seems to be a bit of positiveness coming out now for the summer, and we will monitor that.
Sure. Thank you so much. I'll go back to the.
Thank you. Next question comes from the line of Nilesh Shah from Moon Capital. Please go ahead.
Thank you. I hope I'm audible. My question is essentially on the market shares. You gave a little bit of color on that, but just thinking about one state on which we get data on a regular basis, Karnataka, which has generally been a state where you've been very strong in the past, there's been a significant market share loss out there. Can you give some updates as to what really is happening in that particular state for you?
So in Karnataka, yes, we have lost some market share, to be honest. There has been some dynamics there in terms of the growth of what we would call the economy segment, particularly driven by power cool. Now, that has grown quite a lot in the market. We have also introduced bullets in that sort of segment, but we are careful of driving that volume growth, right? Because we feel that is not good for the total category. So we have lost some share there, but we're going to work our way through that and see how it goes. In Karnataka as well, as you know, the elections are coming through, so there is quite a bit of volatility in the market of supply. So we've had some maybe administrative issues around dispatching. So that has complicated things a bit. Now, next week, as you know, it's going to be a bit more difficult. So hopefully, as we get through that, we can get back on track again.
Okay, and then the second question essentially is on this part that, we've been trying to focus on the premium segment, which obviously is good from a Heineken perspective and good for UBBL from a long-term perspective. But in the near term, how do you balance the volume growth versus what your aspirations are from a long-term perspective for the premium portfolio? Which is to say that when your sales force is going through to the outlets, how are they incentivized to drive volumes versus mix versus just overall growth for the business?
So I'm not going to go now into details of the sales incentive schemes, but of course, it's a combination of the two. The pull from the consumer and the push that we give. We do incentivize sales to focus on premium as well, but importantly, not to take their eyes off Kingfisher, which is the bread and butter of our business still, right? So it's the right balancing act, I would say, right, in managing that. By trying to build the brands through digital, through media, respecting the regulatory environment, we build consumer pull, we get the traction, and we see nice traction coming through actually for the Heineken Silver brand. And that's how we do it. And it needs to be a game of patience. I think that is key for us. It takes a long time to build a brand. If you look what Heineken has done in markets like Brazil, it's taken many years, but we can see that at the end of the day, there's huge opportunity for it.
Got it. That's clear. Just one small bit on the input cost bit which you spoke about to the earlier question. Given that the volumes arguably are lower than what we would have envisaged as we went into the season period, and even now we have certain issues with the weather conditions, so the volumes for next quarter are also slightly uncertain at this point in time. Would it be then fair to say that the barley which you've procured will probably go through till the end of 2Q, given the lower than expected volumes that you've witnessed?
That's a good question. That's a good question. Of course, I'm also grappling with that. So I'm still confident that, that we will continue to have good volumes. But to your point of, if we have muted volumes going into the next couple of quarters, which hopefully won't be the case, then that would be an impact. 100%. I cannot deny that. That would impact, yes.
Okay, got it. Thank you very much for that.
Thank you. Next question comes from the line of Krishnan Sambamurthy from Nirmal Bang. Please go ahead.
Yeah, Radhavat, when you mentioned that gross margin pressures are likely to persist in Q1, were you talking about both material cost pressures as well as state mix being unfavorable?
Yeah, I mean, the state mix, it's difficult sometimes to make the call, because the state mix also a bit stronger in quarter four than we expected, so it was slightly. It could continue, not to the same extent, potentially. What we are doing, however, is ensuring, or through revenue management activities, is to try and push more and more pricing also in those states that have an impact on state mix. So that is key focus for us. So we are looking at other states where we could potentially take price as well. That will help us in that respect.
And how many months of barley did you have inventory? Did you have at the end of March, and how much do you have currently? Would you be able to share that data, given that you typically procure barley for the 7-8 months of the year during the season?
Look, we had quantities higher than what we had in March 2022, right? And the reason behind that was that we needed to be slightly more conservative as we moved into 2022 and the back end, because if you recall very well, the barley crop wasn't good in 2022. And at the same time, volumes were coming way above expectations. Like I said at the beginning of the call, if you look at the full year volumes, it was a record year for us, which is fantastic also for the category. And when we saw that coming through, as we were progressing through the year, we made the call that we need to procure more. At that stage, there was also the pressure around Ukraine and barley crops, combinations of the volatility, and therefore, there was a more conservative outlook on that. So our crops are higher. How much more, I cannot quote that really to you at this point, but yeah, that's basically the background to that.
Okay. And have you been supplementing your inventory significantly over the last month or so?
Have we been, sorry, what?
Increasing your barley inventory?
Well, no, we now are working to get the new crop in. So we already started purchasing new crop, and we are in the market and we are sourcing. So that's happening, yes. But of course, we still have the old crop.
Okay, just one more question on the other component of your raw materials. While Q1, the higher proportion of market would still mean that any adverse effect of, particularly from a sequential perspective, your bottling cost can come down. Do you see bottling cost being high for a few months and therefore a risk to your Q2 numbers and beyond as well? Or do you see some sort of reduction there?
Yeah, the pressure on the bottling is still there in pricing. So we still see, our Q1, the bottling pricing will be an impact, and even into Q2 on the bottle. It's more the barley that I see the sort of, the improvement, but on the bottles, the pressure is still there because of the supply in the market. But I think we are working through that with our large suppliers. And I think we are much more looking now into the medium to longer term, that we are in much better position and control of our pricing.
Would you be in a position to guide? Sorry.
And on top of that, I think I mentioned it also in my previous call. There's a lot of focus on us on the returnability of the bottles, to get that returnability improvement. So that's what the team working on. It's not an easy process, right? Because it's a complex infrastructure of bottle collections, through the different S1, S2, S3 sort of layers that we operate through. But I think there is more that can be done there, and that of course helps a lot. And it's also great for sustainability. It's got a double impact for us, double positive impact. But it just, some of these things just take a little bit of time. It needs structure, it needs thinking through, but we see opportunities there as well.
Okay. And would you be in a position to guide as to when do we expect bottling cost to come down, Q2, Q3, realistically?
It's a bit difficult for me to say that now. In terms of bottles, I still see the pressure continuing there a bit on the bottles. I think we're going to get more the benefit of the barley than the bottles at this point in time. On the bottles, I see it more us being much more effective in terms of bottle returns. That's what we need to also focus on.
Okay. Just on a follow-up on that, typically, if I'm correct, the market bottle proportion would be about 70 to 75%. From a 4 or 5 year perspective, what do you expect that number to be?
Yeah, I'm not. It's estimates. I'm not going to go through those estimates. We want to improve on where we are and how we came out of COVID, and there has been some improvement already, but I'm still not happy with it. I still want the teams to work more on that, to focus on that. And for me, it's all about profit as well in terms of efficiencies, but also the sustainability agenda for us.
Understood. Thanks a lot.
Thank you. Next question comes from the line of Ajay Thakur from Anand Rathi. Please go ahead.
Hi, sir. Thanks for taking my question. Just wanted to understand on the competitive intensity, given the fact that many of the new players are kind of seeing increasing share or increasing revenue, which is much faster than our growth rates. Can we expect that in the medium term, our market share could be at threat from the current levels?
If our market share would be, sorry?
Our market share would be under threat in the medium term from our current levels, given the competitive intensity rising from the newer players.
No, I mean, look, Kingfisher has a very strong brand presence in India. And I think our premiumization strategy is also going in the right direction. Competition is healthy in India, and as we've always said, there is a lot of opportunity for category growth. I mean, we just need to focus on doing the right things, in opening up new occasions for the brand Kingfisher and for our premium portfolio. And I think if we do the right things, we can, keep our market share or grow our market share actually in certain states and, really grow premium because where we feel we are under indexed. So that would be nice to see, and that is the focus to bring up our premium market share.
Okay. And secondly, I wanted to understand what would be the mix of bottles and barley for us in terms of the raw material cost. And if I were to look at in terms of the correction in the barley cost, will we get the benefit of the whole of the correction in the barley cost, whenever we exhaust our current inventory?
Well, yes, we will get the full benefit when we exhaust the full inventory. That's definitely the case. And hopefully we can exhaust it as quickly as possible, to be honest, right? That would be the best. In terms of the mix cost, and that I've given quite a lot of information already on that from the previous question. So in terms of the bottle strategy and barley pricing, so maybe you could pick that up from the transcript as well. But yeah, covered that.
Okay. Thanks for the same.
Thank you. Next question comes from the line of Chinmay Gandre from Canara HSBC Life Insurance. Please go ahead.
Yeah, thank you for taking my question. So just on the gross margins, so you mentioned that largely it is attributed to state mix, especially the Q-on-Q decline, the sequential decline. So can you help us understand which are these states which would have resulted into a negative impact with respect to the state mix?
You mean in quarter 4, yes?
From quarter 3 to quarter 4.
Yeah, so we're getting really strong volume growth out of states like Telangana, and Rajasthan was also strong despite, not actually despite. Actually, it was strong. I think going into the back end of March, there was some weather impact already starting. But I think those states in the north, and Telangana has some impact on the state mix. So the growth exceeded what we thought a bit, yeah.
And you also mentioned that basically you are trying for price increases in these states which have impacted you negatively. So have you got any hikes in any of these states recently? And what kind of quantum hikes do we require over here?
So we got some nice price increases in Rajasthan in March. Robin, I can't remember exactly how much the percentage was. It was double digit.
Okay.
Yeah, it was double-digit growth, price increase. So we had a nice price increase coming through there, and we are looking at opportunities also in some of the other states I mentioned, yeah.
Yeah, and you also mentioned for Telangana. So Telangana, we would have obviously filed for the price increase. So, is there a set timelines in which whether we will get a response, either whether we get it or not get it? How is that?
I'm really sorry, I didn't understand the question. The last question.
In Telangana, we would have also filed for price increases. So, is there a set timeline which the state has put in which, say, in 1 month, 2 months, or some certain time period, we will get a notification whether we get it or we don't get it?
Well, we are in the process of discussions on that one. So we are hopeful to get that price increase also in Telangana. I think our case is quite clear of why we want these price increases due to the strong inflationary pressure our business is on. And you know, the officials understand our views. You know, we are open, really open in these discussions. So hopefully, you know, we can get it. They need to do their work to understand it, which is understandable. And you know, we are really pushing for it, and that would be very nice if we could get that through.
Yeah. And lastly, my question is on Tamil Nadu. So, because of the change in the route to market, we have lost our presence over there. So, I mean, do we have a target or a guidance or a path wherein we plan to, say, recover at least, say, 50-60% of the market which we lost? I mean, can you help us on that?
Yeah, so like I said in the previous calls, we changed the route to market to the way we believe, you know, we wanted to try with our own sales, etc. Of course. And like I said at the beginning of the call, we see some positives coming through now going into the summer season of orders coming through for May and June. But I want to be cautious on that. In terms of if this is for the longer term or not. But it's nice to see that that's happening, you know, and then we can see also, you know, some excitement at the brewery that this is happening. But I'm just cautious of if this is a long term. So, but like I said, you know, we continue doing our efforts to try and you know, get the volumes. But let's see.
So, but ambitiously, I mean, should we expect at least 50% kind of a recovery in that market in terms of the lost volumes, say in a year's time, or would that be too aggressive? I mean, can you just broadly help us on that?
Like I said to you, I'm cautious at the moment. We're doing what we can. There is some positives coming through for the next couple of months, but you know, I cannot really say at this time. You know, are we working through our way through that? And I don't know.
Okay, thank you.
Thank you. Next question comes from the line of Chanchal from Bitla. Please go ahead.
Hello, am I audible? Hello.
Hi. Good. Hi.
Yeah, hi.
Yes, we can hear you.
Hi. Thank you for the opportunity. Just firstly, RISI has been released from today. So, in terms of management change, new CEO, you can talk anything about it?
So you know, his announcement has been a few months back. As you know, he decided to, you know, he wants to do something different. So he's just given me a lot more work, unfortunately, but okay. In terms of the CEO search, so we are in the process. We are a lot closer, so that is good news. So hopefully we can come to the conclusion of that, you know, in the near term, and that's basically what I know at this stage. So much closer to the decision as we work through that, you know, as Heineken also works through that with UBL.
Sure. Near term would be 2 to 3 months, I assume.
Well, hopefully even sooner than that, but yeah, that could be, I think, you know, the worst case scenario, 2 to 3 months, but maybe, let's see. I cannot really give a date at this point in time, yeah. I should know over the next few weeks a bit more.
Sure. Second question is, how big was Tamil Nadu for us in terms of million cases, if you can help us understand?
I think we've discussed this. You know, it was sort of high single digits in terms of volumes in the past, yeah. So, I mean, yes, it has an impact, and like I said, The 17%.
No, I'm just asking, say 2-3 years back, if I assume 3 years back, how big was Tamil Nadu, how big is Tamil Nadu in terms of beer market? Rough numbers, if you can help us understand.
Well, it was around 7-8% of our total volume, so you can just figure it out.
Sure, 7-8% of total volume. Thirdly, in terms of operating profit per case, do you internally look at operating profit per case state-wise, or how does your profit and P&L account work? Because each state profitability is mixed, and you have called out a couple of quarters that because of the state mix, your profit is not superior. So do you look at operating profit per case on various state internally?
Yes, we do. Yeah, we do.
And what's the
internally when we go into more details of the business, we do. We look at India, of course, as a total, and also we split it. Alcohol and soft drinks in our segments, but we also, for internal purposes, of course, we look at per case, per state as well, per brand, per SKU, as well. Small bottle, large bottle, can, etc. Of course, per case, we go into that sort of detail. Correct.
So interesting. And what's the cutoff of operating profit per case, that below that operating profit per case will not operate in a state, or it's not good to operate in a state, or you focus on volume only?
No, definitely we do not just focus on volume. So not at all. You know well that certain states are more profitable than others, but we're a scale business. Kingfisher is a national brand. It's the most national beer brand in India. We want to keep it that way, but we have to make the right calls and do the right revenue management activities so that we can grow profitability in the states that there is lower profit over time. And that's why, like I said, in terms of the state mix where we have some negative impacts, we try and focus our revenue management activities also around there of how we can extract value. Of course, we're in a regulated pricing environment in some states, but as we work through it and we have the discussions around it and we show that we have inflationary pressure, we can have a good conversation around it and try and drive price.
Sure. Let me ask you again. I'm just trying to decipher. Do you have a benchmark operating profit per case which you can share with us, which you look at, or it is on operating margin? How do you look at state-wise?
Look, I'm not going to share these type of details in terms of per case, etc. So we have that information, but that's information that's internal that we do not share externally.
Sure. Thank you. I wish you all the best. Thank you.
Thank you.
Thank you. Next question comes from the line of Akash Goel from Tara Capital Partners. Please go ahead.
Hello.
Yes, good afternoon.
Yeah, good afternoon. Hi. So, sir, we have heard about the operating environment and the scenario and the possibilities of how the operating metrics would pan out maybe. But just to get a sense on some of the strategic initiatives or, how are you planning out, what kind of, some color on the strategy that you're taking to, come back or maybe improve in terms of the overall performance, and some color on that would be very really helpful.
You mean overall?
Yeah, from a broader perspective, yeah.
Well, our strategy really hasn't changed to what we've been saying. So for us, we continue on the same track in terms of category penetration, playing our role as the market leader to grow the category in a responsible manner. That's important for us, but there's a lot of opportunity to grow it in a responsible manner, to premiumize, to look at more occasions for the category. We are now looking much more and more on innovation internally, to build an innovation funnel, to take more risk with innovation as well. So, that continues. We look at our footprint in terms of, where we have our breweries. We've got a healthy footprint, but we can also improve on it in different areas so that we can serve the markets better. We look at also our SKU performance, bottles, cans, what is the consumer looking for. So that is overall, how we continue to look at the total category. And as a leader, we take responsibility of that as well, to do it in the right way and to also ensure that we look at our sustainability agenda in the right way as well, which is very important for us and the planet.
Got it. That's helpful. And in terms of the premiumization that you are talking about, how are you looking to take that premiumization mix higher? What are you, going to do to promote that or something from maybe Heineken's perspective as well?
So with Heineken, we are really focused on certain states. That's important for us. We want to really embed into certain states and to grow the brand and expand the brand step by step. So it's not an all-up India launch, because then we lose focus and it's not good for the brand. So that is the approach. It's also important for us that we manage the profitability. So we try and, in the place where we grow Heineken, that we have the right footprint and the production for the brand. So we work through those things as well. In terms of the Kingfisher family with Ultra and Max, same thing. We find that there's really pockets in India where we believe that there's a lot of opportunity for Ultra and Ultra Max, but then sometimes we just don't have the footprint for production there, and therefore then the profitability is low to move volumes into state. So all these type of things we are working through, and to really focus on that premium and to drive profitability and premium.
Got it. And lastly, just any sense if you could give, is there any possibility of a stake increase from the promoter side coming through, something like that?
Which stake?
Promoter stake. If there's a possibility of a promoter stake increase coming through or something.
I don't actually understand the question. Sorry. Promoter stake.
Sir, the stake from the promoter in the company, is there any possibility of a buyback there, or maybe a share increase from the promoter is what I'm asking about.
Sorry.
Color on that.
Yeah. You mean from the majority shareholder?
Yeah.
No, not that I'm aware of. Not that I'm aware of. There's no plans like that.
Thank you. Please follow up for the more questions. Next question comes from the line of Prashant Kothari from Piclet Group. Please go ahead. Mr. Prashant, please go ahead with your question.
Yes, sir. So my question was on excise increases. What are the kind of excise increase on an average we've seen this year, and how does it compare with what we might have experienced in the last 2 years? Is there any kind of a change in trend?
I don't have that information in front of me, but as far as I am seeing and what we had discussions, nothing really that significant, to be honest. That's the way I'm seeing it. Any changes in excise policy across different states, I haven't seen really significant increases in excise, no.
Okay. That's helpful. Thank you very much.
Thank you. Next question comes on the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. Thanks again. So quick questions. I wanted to check what is the volume and value share of your premium brands in FY23?
So the volume share we have around 21, 22% or so. We don't really track value, to be honest.
And what would this comparable number be in, say, FY19 or pre-COVID?
It was lower. I cannot recall now. I think it was around... I'm not sure. I know we've grown low single digits or no single digits in terms of market share, but I cannot recall exactly how much that was. But we have grown pre-COVID, yes.
All right, no worries. The second bit which I wanted to understand was, I know we are going through this whole steep COGS inflationary period, but just wanted to, check on the thought process here. As you look to increase the share of these premium brands, should we expect a disproportionate increase in brand spend? And even if you reach somewhere normalized gross margins, the operating margin, uptick will be far more gradual in your view. I'm talking about next 3-4 year period. And also a related question is, I understand you talked about managing profitability a couple of times. So are you only looking at market shares in premium brands? Has that become the key metric for you? Or you still care about overall market shares? So, you're okay to kind of let go of low margin state or brands in those states and kind of look at, building more of the premium portfolio.
Okay, so I remember the last question. I will start with that one. So in terms of market share, so definitely we are under indexed in premium, so we want to grow share there as well. In terms of overall market share, we need to balance that correctly, right? We want to keep the scale that we have. We want to ensure that within the mainstream segment, Kingfisher does maintain its strong position, right? So we don't want to lose share within mainstream segments. But, as premium grows, it does impact mainstream depending how fast the total category grows. So there can be some shifts there. But then, we also look, like you rightly are looking at, how much is your share in premium. We look at it, and we also then want to see, as we get better data points, what is our share in mainstream. We definitely do not want to take our eye off Kingfisher. I mean, I want to make that very clear. Kingfisher is a very important brand for us, and it's a fantastic brand. And like I said, was that we look at new occasions for the brand as well. We do extensions on the brand. So for me, it's an and, to be honest. Under indexed in premium, focus on that, grow share. Don't lose share on Kingfisher. Balance it between revenue management activities and the growth of volume. So have that in mind. So it's not at all costs volume growth, 100% not. And therefore, we lose, a couple of percentages here and there, we're not going to panic about it, right? Not at all. And sometimes, you might lose 1 or 2% on revenue management activities, and so be it. So I think that should summarize it.
Got it. Thanks. And the last question was on CapEx. Plans for FY24. Anything to share here?
So our plans for 2024 are strong. I think in the region of around, 300 crores, if I recall. Yeah, around 300 crores, if I recall correctly, in that ballpark.
All right. Thank you so much.
Thank you. Next question comes from the line of Harit Kapoor. Please go ahead.
Yeah, thanks. So I just had two or three questions. One, you had mentioned that the operating model changes, you had a 17% growth. Are you only Xing out Tamil Nadu and Andhra Pradesh here, or are you also Xing out Delhi, etc., which had some disruptions in the last quarter?
Did you say exiting out?
Yeah, are you excluding only Tamil Nadu and Andhra Pradesh when you are saying excluding operating model changes, you had 17% growth, or are you excluding out any other states as well which had some disruptions in the past, like Delhi, etc.?
Yeah, so in that 17, I also exclude Delhi, and we also not operating in Chhattisgarh.
Right. So these four markets are outside your purview. That you say 17%.
Yes. So I've included them. That's also included in the 17% part. Yes. Delhi, Tamil Nadu, some impact in AP and Chhattisgarh. Yeah.
Got it. The second thing was on the price increases. So you've had 5% in quarter 4, which is obviously over the year you've received. Given the trend currently, what is the kind of price increase trend on average that you believe you can have for fiscal year 24, given the data that you already have in terms of price hikes that you've got, or at a weighted average level?
As a weighted average, I'm sort of trying to push, mid-single digits. That's it. That's the way and if we can get more, that would be great. And, as we work through that, the revenue management activities are not just around that, but also, in terms of any trade schemes, etc., that we try and be more efficient at. So, yeah.
Got it. And just a clarification, in your presentation, you had mentioned you had received price increase in Telangana. Was that the old price increase you were talking about in the presentation?
Yes, that's a spillover, yes, because the Telangana price increase in 22 happened sort of more in the back end of 22, if I recall. So that's actually a spillover into this part of the quarter.
Okay, and so the discussions you're having now are for a fresh price increase you're trying to push the state for that, right? That's what you were trying to say.
Yeah, we're trying to push for a fresh price increases, driven around the inflationary pressure, yes.
Perfect. That's it from me. Renju, you can take the last question and then we can close.
Thank you. The last question comes from the line of Nilesh Shah from Moon Capital. Please go ahead.
Yes, thank you for the follow-up. Just two more. First of all, on Tamil Nadu, when this route to market change did happen, I remember, in our discussion, we were told that the company expects minimal disruption from the Tamil Nadu route to market change. That obviously is not the way it panned out. So where were you surprised in terms of how much it impacted our business?
I do not believe we said that we expect minimum disruption. We actually didn't know what it would be. We took the decision, and to change our model where we, use our sales force, etc. And yeah, I mean, the impact has been larger than expected, operating, and therefore, we try and work through that to try and get our volumes back. And like I said, summer looks good, but I'm very cautious on that anyway.
Okay.
So, yeah.
And any possibility of an RTM change in other states, especially given that we have a management change which is on the anvil?
At this stage, no plans of any other route to market changes. We're looking, like I said, we continue looking at it state by state. We look at our footprint, our commercial strategy,